Investing is simple but not easy, and that is what we have realized in our journey, that you need some powerful principles that can help you to navigate your investing journey. And that is what we will learn in this particular session, which is core principles of investing. And I'll tell you what all things we'll learn in this session. There are brief concepts which we'll learn first. The first concept we'll learn is how to create a right mindset for your decision making in your investing journey. The second principle which we are going to understand is what are these different powerful principles, 8 powerful principles, what are those and how to implement that. And finally, what is the framework that you should use for the implementation part. So this is what we are going to learn in this particular session. Hope you are ready with your pen and notepad, and let's get started with this journey. Before even we get started, let me remind you that we had a first session of the series Road to Rich, where we discussed about foundation for long-term wealth creation, and that is where we also learned that how to get out of your rat race and how to basically create cash flow by using the entire active versus passive investing. So hope you have watched this. If you have not watched that, please go and check it out later after this video, and you can connect the dots between both the things. Okay, so let's get started. If you are all ready, just type ready in the comment box. Awesome. So let's get started with 8 different principles which we are going to learn inside this entire series. So what is the first principle which we need to learn is power of compounding. Okay, let me share what is the power of compounding looking like. Okay, and let me share the mind map so that all of you can understand what is this power of compounding. The first principle is like the 8th wonder of the world. Okay, like compounding is one of the most important and prominent thing which has created magic across all the spheres of our life. Yeah, right from investing to health and all different things. It has just created magic. The equation says, if you are able to do things consistently over a long period of time, it can create massive results. And that is what also applies in investing. There is a beautiful video by Ramesh Davani. All of you should watch it. It's called 10 lakh to 100 crore in 30 years. Okay, so basically what he tries to say is, if you are able to compound your investing returns by 25% every year, it means that every 3 years it doubles. Okay, and if you start with 10 lakh rupees, just by this doubling of your capital every 3 years, it actually can become 100 crores in 30 years. Okay, so that is the magic of compounding, and that is what you need to learn also as a principle of compounding. When we are putting money into stocks, we are putting money into buying actual businesses, your core portfolio, what actually happens is your money is compounding inside the company. It is called intrinsic compounding. And I've detailed, videos in my YouTube channel also, and we have a dedicated module around it, which is called Core Portfolio Blueprint. But here, 4 essential components you should learn about your long-term compounding. The first thing is the company should have growth. Okay, if the growth is not there, you will not be able to compound, right? Imagine there is only one branch of HDFC Bank and they don't grow anywhere else. Okay, will it make a lot of returns for you? Absolutely not. Okay, the second thing which is very important is return on capital employed. Again, we have a dedicated module on financial ratios. It's there also on YouTube video. There is a dedicated video I've created. But this principle is also very important. Are you growing profitably or not? Okay. And third very important thing, if you are able to grow profitably, are you able to sustain that growth by reinvesting your capital again and again and again? Okay. And how long you are able to do that? So just repeat with me: growth, ROC, reinvestment, and longevity. These are the 4 powerful principles of intrinsic compounding. If you are able to find a company which meets all these 4 criteria and you are able to find it at a reasonable valuation, you can compound really well. Okay, so this is the first principle. All of you, if you have noted this down, just type noted in the comment box. The second thing what we will learn is your goal to financial freedom. Now, lot of people I've observed, and I was like that years and years ago is that we are just running, but we don't know where we want to go. Yeah, we are just in that rat race where we are just running and running and running, but we don't know where we want to reach. And if we don't know what are our goals, where we want to reach, how much capital you require, how much money you require to retire or achieve your financial freedom, nothing is going to change in our life. That is where the second and most powerful principle, even if you, without doing strategies and all those things, is having your goal card in place and having your affirmations in place. I recommend all my community members to read their goal card every single day. And I also have a set of affirmation which I shared in the first video also, which gives you inspiration in terms of achieving your financial freedom in the first place. Because if you don't have a right mindset, how are you going to apply that mindset to create wealth for you? Okay, so that is the first principle all of you should follow. And there are 3 stages if you want to conquer and start building massive passive income. The first stage is where you start covering your basic needs. What are your basic needs? It's like your roti, kapda, makan. So your passive income like dividend, your capital gains, rental income, interest income, whatever is the passive form of income that should start exceeding basic needs. That is where you can live freely, you can take decision more wisely, and you can do things of your choice slowly. Then the second stage you need to all aim for is how you can cover needs plus wants. Now what are wants? Wants are something good to have, but if it is not there, it is fine. So going to a restaurant, going to a movie once in a while, okay, going for a vacation, okay. So those are all wants. If you don't go to vacation, of course, over a period of time, you might get bored and frustrated, but still you can hold on. It is not like you die without it. But basic needs like roti, kapda, makan, you cannot live without. And the third stage is where you get ultimate passive income sources, which covers all the kind of expenses which you need. Okay. So these are the stages which you should focus on. How step by step you should go for it. I've covered that in one of the module, which is how to budget, save and invest. Okay. And I've shared the template also. If you want to download the template, you can go and check it out. It's called technofunda.co/budget. That is how you can start this journey. Okay, and how to do that we'll learn in the subsequent part of this video itself. But this is how you accelerate your journey towards financial freedom, by having clear goals, having a proper framework, and then utilizing the power of tools to actually track it. Okay, so that is the second principle. If all of you have learned this and understood this, just type "got it" in the comment box, and let's move to the third principle. Now, third principle is one of the most critical principle which all of you should follow in your investing journey. Okay, if you are not following it, you will be totally confused throughout your investing journey. So the third principle which you need to focus on is build systems. Just type BS, build system, in the comment box if you are getting this. Okay, and there are multiple types of system which you need to build if you want to achieve investing journey in a much peaceful way. Let me share you what all things you need in your investing journey. The first thing you need to build is your buying, adding and selling system. Like your decision around buying or screening companies should be a formalized process. You should have a process around adding your position, and you should have a process around exiting your position. Okay. Now what I have done is I've created my own framework. This is what kind of system I've created. If you see, I call it like a Shaktiman indicator. And this is how I have created how I will take entry position, how I will build my position, and how I'll exit my position. So wherever it becomes red, it tells me that I need to be alerted and I need to exit. And wherever I'm entering, it is showing me green signal. Okay, so you can build these kind of systems so that it gives you ultimate freedom. It gives you ultimate power of decision making. Second thing which you need to build is your allocation system. Like once you have understood how to build your satellite portfolio, how to build your core portfolio, and the reasoning behind it, I've again covered in a detailed video, so I'll not repeat here. So if you want to watch that video, just bookmark this later. It's called how to outperform Nifty returns. Okay, you can watch this later. I've covered the process of what is the logic of creating core portfolio, what is the logic of creating satellite portfolio, But once you build that, right, once you build your core and satellite and the logic is clear, you need to continuously refine its allocation. And you have to continuously monitor its position sizing and keep adding tranches to the winners. We'll learn more about that in the later section also. Now you have to diversify your overall bucket of your portfolio, not just equity, but all the other asset classes, which is called diversification system. And this I have learned from Tony Robbins' book. He says about 3 buckets. So your portfolio overall, like your entire net worth, should be allocated first into security bucket. What is security bucket? It's more like FD, it's more like fixed income instruments like bonds. That is where you have highest safety standard. So that is what will give you a security kind of bucket. Then other part of your money should go into a growth bucket. Okay, and that growth bucket will take care of your wants and to an extent some luxuries also. And that is where your money should go into equity. And then there is a dream bucket, which is more riskier, high risk, high reward kind of instruments, like startup investing or private equity investing and all those kind of things, or cryptocurrency also, if you understand that. I personally don't understand it. So if you are getting this so far, just type got it in the comment box. Okay. And then finally you need to build ranking system. Like you need to rank your portfolio companies every quarter. Like each and every company gives a quarterly result, and your portfolio should be focused in such a way that highest ranking company should have a highest allocation. Okay, your best of the best company should have highest allocation. That is how you will make money and compound much faster. Like I use a tool for this, which is called Ride Winners, and there are different ways in which I can rank companies, and it gives me a logical score. And once I have the score, I just sort it in descending order, and I can go and build my portfolio in a nice way, and I can reallocate the positions as and when it is needed. Okay, so this is like the third thing which you need to understand in your journey. Let's come to the fourth thing. Okay, and by the way, if you want to learn how to build system, and if you are not yet part of my community, you can even join this free masterclass where I teach you how exactly you can build your own system, the entire system called buying system, the adding system and selling system. Okay, so you can just note down this link and you can join if you are interested to learn about this. I'll also share what exactly we cover over there. Let me see if I have a snapshot of it. So this is what we cover in that particular masterclass. So how to initiate and how to anticipate where smart money is going. Then we learn about continuation pattern, where we'll learn about how to add the position, and finally how to exit. Okay, that is again most important part of your journey. So that is what you are going to learn there. Now, fourth point, which is you need to understand that investing is not like yes or no game. Okay, it's a play of probability. Nobody can tell 100% that this is what is going to happen. It's you have to bet on it. It's like just you go on casino, right? If you go in casino, what do? You bet on a chip where you feel the probability of winning is high. Your odds are in your favor, and that is how investing is also. Okay, so you need to bet on things which you feel has high probability. It is not like a science where either it will go up or down. It is not like law of physics. Okay, and that is where it gets even more interesting, and this entire math what we are learning, that we need to learn, and I'll show you how this math actually you can use in your favor to compound in a much better way. Okay, but this principle is very important. Now the math I just shared sometime back on my Twitter handle also. I wrote that bookmark this math of investing. If you go down 90%, you need to make 10x returns to just break even. And to make 2x of your buying price, you need to make 20x after the fall. Okay. So how many stocks will, do that kind of bouncing? Okay. You have to think about it. You can take a screenshot of this. If you remember this math and protect your downside, that's the best thing you can do. Okay. And if you're not yet following me on my Twitter handle, you can just go and check this out. So let me summarize the principles of play of probability, right? So first, understand what you are getting into. Don't get into things like F&O and intraday where the chances of blowing up your capital is much higher, because again, you are playing a probability game. The second thing is understand the downside risks. Okay, so if the table which I showed to you, if that is clear, you will understand why it is important to curtail and protect your downside. So even if you have 50% probability, right? If you are winning 50% of time and losing 50% of the time, if you are able to exit very quickly when you are making mistakes and ride your winners, that is how you maximize your risk reward. That is where the risk reward part is supreme thing in your investing. A lot of people focus and give too much attention to what to buy, okay? Which company to buy, which sector to buy. Of course, that is important. But after that, the allocation part and how you maximize your risk reward is the entire game. Okay, if you got this and understood what I'm talking about, just type RR, risk reward, in the comment box. Please note this down. Okay, if you are able to control risk reward, when you are losing, you minimize your risk. When you are winning, you maximize your reward. And if you keep playing this game, there is nobody who can stop you in winning your investing game, because it is all play of probability. Okay, so that is on building your system and riding the wave of probability. And if you think about what Peter Lynch has said, right, he has exactly said the same thing. Let your winners run and cut your losers. Right? It's easy to make a mistakes and do the opposite. Remember this. A lot of people do this exact same mistake. They just do the opposite. They book the profit in the winners very, very quickly. And whatever are their loser, they keep adding more and more money into that. But you have to basically, put water to your flowers and cut out your weeds. Okay. In other words, you don't have to be right all the time to do well in the stock markets. If you find one great growth company and own it long enough to let the profit runs, and more importantly, add allocation to it, the gain should more than offset the mediocre results from other stocks in your portfolio, particularly if you are following risk management and exiting them very, very quickly. Okay. So hope this is like mind-blowing for all of you. And if you are loving the video and the content so far, just hit a like button. And if you are not subscribed to this channel, please make sure you are subscribed so that you can watch a lot of these kind of powerful videos in this particular YouTube channel. Okay. Now let's come to the fifth one. Okay. Fifth point is understanding the sector. Now, why it is very important to understand the sector and do thorough research around the sector. The reason is, it is again play of probability. Yeah, we are trying to maximize our winning position. If we just understand one stock and not focusing on whether the sector is having some tailwinds or headwinds, then nothing is going to change. Okay, so you have to develop a circle of competence, understand where the sector tailwinds are. And if you have watched my recent video on defense sector, that is exactly what we did. Right? So the entire defense sector is having huge, massive tailwinds, right? It is having Atmanirbhar Bharat support, the PLI scheme, and there are a lot of indigenization that is happening. And due to that, the entire sector is getting so much of traction, so much of order book each and every of these companies are having, that they can keep executing for next few years and still there will be no dearth of orders. Okay. And if you have watched the video, you will know, right? We discussed a lot of different patterns. I'll just, move my screen here. And we discussed a lot of these companies in that particular video. So data patterns, if you think about it, from August, it is almost like doubled. Okay. It was like around 700 rupees. From August, September, and we are right now in November, 3 months fast forward, this stock has doubled. Then BEML. Okay, this stock was around 1,000 rupees. This has got 50% return since then. Then think about Masdoc. This, I personally am riding it as we speak also, just as a disclaimer. This has almost doubled. Okay. Then take an example of solar industry, right? This has almost doubled. HAL, again, same story, right? 1,800 rupees to like 40-50% returns. Cochin Shipyard, same story, like from almost 345 rupees, it is around 604 rupees. Garden Reach Shipbuilding, again same story, almost double in no time. And then Midani, almost double in no time, right? So think about this, guys. For 5 to 6 months, you just focused on studying one particular sector, going deeper into it, like just how we did our, video on Defense sector, if you have not watched it, I would highly recommend you go and watch. Just type defense sector Vivek Mashrani and you will find that video. We did in-depth analysis of what is happening, what are the triggers, where the orders are coming, in which all bidding the orders are getting win, and which companies are winning those orders. Okay, if you are able to spot those kind of sector tailwinds, sit for next few months, create a basket and add to your winners, you can easily outperform Nifty left, right, center. How many of you are, getting mind blown with this one particular idea? One sector, 5 to 6 companies. You don't need to hunt everywhere. That is the power of focus. You don't need to hunt everywhere and get distracted. And there are like thousands of companies on TV. If you go, they keep distracting. On social media, there are so many companies. But the real magic happens when you focus on one thing, understand how to find these kind of sector tailwinds, and then ride it. That is the most important thing. Okay. Now, sixth very important point is understanding the patterns. Okay. Now, the good part is, just like any other art form, even in investing, there are patterns which keep repeating. Okay. There are patterns which keep repeating again and again and again. Like this sector tailwind which I told about, that keeps repeating again and again. Like 2 years back, I did a sugar sector video. Like 6 months back, I did auto sector. Then we had a chemical sector video in 2018. Same pattern played out again and again and again. Because it's just the same thing, right? It's just the same thing. So understanding the patterns again is one of the most critical component of your investing journey. I'll tell you what all kind of patterns you can identify and imply in your investing journey. Okay, so there are two kinds of pattern, right? So some are fundamental patterns like consolidation plus pattern. Like there are industry where there is huge consolidation happening and there is a shift in the market share that is happening. I've covered these in my even modules which I share with my community members. We've gone deep dive, like done a 2-hour, 3-hour analysis on this one topic. Okay, we call it powerful patterns, compounding over there. The second one is patterns of wealth destruction. You should know what to avoid in your investing journey. Otherwise, you will make all the blunders. And I have, accumulated all the blunders which I made in my investing journey, and I have documented that into one of my video. You can go and watch it later. It's called Patterns of Wealth Destroyers in Stock Market. Okay. Then you need to understand patterns like consistent compounding, like how consistent compounding happens, how a sector can grow like 10-15% for a long period of time and thereby create a 20-25% kind of earnings growth engine which can compound and make your capital double, as we discussed in the first point. Okay, so that is on the pattern of fundamentals, and there is one more pattern which I discussed, which is a very powerful mega trend that is happening, which is a China plus one pattern. Okay, and a lot of chemical companies, a lot of agrochemical companies, a lot of pharma companies have got benefited because of this one powerful pattern. If you have understood this well, decoded this well, you can again get a lot of multi-bagger portfolio stocks in your portfolio. Okay, so that is the China plus one pattern. Now, in terms of technicals also, there are so many powerful patterns. So first pattern is called base breakout. Okay, like if there is any consolidation base or a circular base, and then there is a build-up that happens in terms of price and volume. And if you observed the defense stock which I showed to you, there was base breakout in so many of these stocks which I showed to you, right? So that way technicals also help you to identify these kind of triggers even before the fundamental triggers are coming out in a very, very nice way. Then second very powerful pattern is called stage analysis, right? And I cover this into my hackathon live implementation program, which I do for my community members. But I'll just show you a glimpse of how this is powerful. So all of you might be knowing what has happened to the US stock right now, right? Now just observe those stock, like let me just make it like world USA, and let's do zoom. Okay, if you open a zoom stock and if you just lay it over in a nice weekly chart format, I've in fact actually laid out because I've covered this in my book. I've taken the screenshot also. Okay, so this I have covered in my book also. So this is how stage analysis can help you avoid very, very big falls also. Same pattern recently paid in Meta stock, which is a Facebook stock, right? If you see the Facebook stock, it's exactly same pattern that has played out. And these kind of patterns repeat again and again. If you observe some of the Indian companies, okay, let me do Indian indices again. And I'll show you some of the Indian companies where these things have happened. Okay, so let me show you Sequent Scientific. Okay, if you observe this chart, exactly same kind of 1, 2, 3, 4 stage analysis has happened. If you think about IEX, the same fourth stage is currently ongoing. Okay, so this is like fourth stage already ongoing. So the point is, these patterns repeat again and again. If you are able to understand them, apply them, you can avoid big losses in your investing journey, and also become profitable if you are able to identify the stage 2 in an efficient way. Then next comes is a VCP pattern, which is a very powerful pattern. It's a signature pattern by Mark Minervini. It's not my pattern, but I've learned from him. And this is also a very powerful pattern which you can use to consistently find ideas which has high probability of compounding. And fourth is like cup and handle. And there are so many other patterns. These are the prominent ones which I am using it. Okay. And you don't need to have a PhD of technical analysis to do this. Even the basic knowledge of technical analysis can help you understand this. Like so many members in my community are even from non-finance background. They never understood anything about investing and starting from scratch. And they are also doing stage analysis. They are also able to spot cup and handle patterns. They are also able to find out base breakouts. Okay. So it's not about having a PhD in any subject, but knowing that pattern in and out in a deeper way. Okay. So if you have found this patterns powerful, just type PP, powerful patterns, in the comment box. Okay. So these are the patterns you should study and go deeper. Sometime we'll also do a detailed session on that if we have time, but that is what is a very important process to understand. The seventh point is, once you have deployed your system, once you have done your process, you have ranked your portfolio stocks, doing the risk reward thing and consistently compounding, you need to keep refining the process. Why we need to keep refining the process? Because ultimately we want to get better and better at what we are doing. Okay. So what we need to do to refine our process, these are the points you should follow. So first and very important thing is invest in yourself. Okay. If you are not investing in yourself, you are tight-fisted, you will never grow in your life. Right? Have a mentor if possible. People who are implementing the same thing which you are intending to learn. I pretty much have mentor in all areas of my life. Right? I wanted to write my book. I got a mentor who is an author coach. He has himself written 23 books. Okay. If I learn from him, I could write my book in 6 months. Right? I needed to learn how to make better YouTube videos. So I learned from somebody who is better in terms of creating YouTube videos, and he has got more than 4 lakh followers on his own YouTube channel. He's a YouTuber, is not in India, but I've learned from him. Right? So that is how you can fast track your learning curve. You can avoid a lot of heavy mistakes, particularly in investing. You incur big losses if you go wrong. That is what will help you in going next level in your investing journey. Next is maintaining a journal. How many of you are maintaining a journal? Just type yes if you are maintaining it. Just type not yet, NY, in the comment box if you are not yet maintaining a journal. Because unless you put down things on your paper, or even you can maintain an Excel, right? So most of my mastery members actually have a template where they put in all the numbers, each and every transaction they do. They put in the number, they measure the risk reward. When they exit, they put in what happened. What went wrong, what went right, what was the risk reward, how the entire position sizing panned out. So unless you don't measure what you are doing, you will never improve. How many of you agree with me? So you need to continuously measure, understand what went right, understand what went wrong, how to avoid your mistakes, and how to improvise on your winning strategies. And that is how you will compound better and better every single day, every single week. Okay. So that is the seventh principle. And also have some time for yourself. When you build such system, you automate things, you can outsource a lot of things, you can delegate so many things, you can be efficient and use tools. Okay. So once you start using a lot of tools, like I use Screener, which I've also shared on this YouTube channel, how to do fundamental analysis of stock using Excel Screener. And then I've also created a video how I use different tools to save my time. Because ultimately you are doing investing for your own peace. If you're not getting peace at the end of your investing process, then what is the point? Okay. So ideally you should spend like 1 or 2 hours every weekend, and that should be more than sufficient. And if you do all the things which I mentioned in this entire video, that will definitely happen. Okay. If you follow the process, if you follow the system, that will happen. Now the 8th point and most important is be consistent. Okay. Once you have developed all these things and you have a roadmap of what needs to be done, a lot of people stop midway. Please don't stop. Okay. You need to be consistent, and how you can be consistent in different areas is like this. Okay. And this I highly recommend all of you to follow. First of all, be regular in investing. Okay. So watch my session on budgeting, how I've told, every single month how you can save and budget and everything I've shared in the second point, I think. So first follow that. Okay. And then you follow on your mindset, like read goal card every single day. Read affirmations every single day. That is the another process you need to be consistent to work on your mind. Learn every single day. If you stop learning, your compounding of mind will go for a toss. Every single day you should be learning something new. Most important, another complementary part, which is not directly related to investing, but very, very important component of investing, is meditation and exercising. Give healthy diet to your mind and body. Okay, do this daily. Your satellite portfolio, you should be reviewing and building every single week. So every single week you can screen ideas, work upon 2 to 3 ideas, and then start building position onto it. So that should be your weekly exercise. Journaling, again, you can do on a weekly basis. Like every weekend you spend like half an hour, put down your transactions, review what went right, review what went wrong. And that is again a very, very powerful exercise. And finally, your core portfolio and the ranking which I showed, you should be reviewing every quarter. Okay, because every quarter you get results of the company and you know what has changed fundamentally. Of course, if it has changed technically and you build your system, it will alert you, right? I've shown to you how I have built my Shaktiman indicator, and you can actually follow your own system. But every quarter when the result comes, you should know what is happening and which company is performing, which company is not performing. Okay, that is how you can be consistent in your investing journey. So hope it was useful, and these are the 8 powerful principles which are super important in your investing journey. If you are not following me on Instagram or any other platform, please check it out. Okay, so I'm Vivek Mashrani and I'm a TechnoFunda Investing Specialist. And if you are not following me on Instagram, go and check it out, Vivek Mashrani. And let me know if you have any questions. Feel free to ask me. And as a next step, if you want to grab a copy of my book, which is an Amazon bestseller, you can just go to, You Can Compound on Amazon and check it out, my copy of book. And if you want to learn with me and compound better, you can join my live masterclass, which is technofunda.co/live, or you can even go to this particular link. So let me know if you have any questions, and I'm happy to answer those and help you in your investing journey. Let me know. Awesome. So we have Karthik who is saying like, how much time should we giving in our investing? So ideally, if you have done all these steps, right? So all the 8 principles which I've told you, if you are following it, you can easily do by spending around 2 to 3 hours every single week. And a lot of members of my community, a lot of people whom I know who have built such system are able to do it. So initially, of course, it's like a rocket launch when you are learning the concepts and principles and strategies. But once you have mastered them, then it is so much easy to implement those every single week. Okay. Awesome. I bought Emphasis around 2075. It's around 5% down. I'm not tracking Emphasis, and you should first focus on your process and you will get the answers. So rather than always not having the process, what I understand, Bhupesh. So I'll just show the comment. So Bhupesh is asking a question on technical levels of company. So here what I can identify is you have not built your system, Bhupesh. So if you have already built your buying, adding, selling system, you would have not asked this question in the first place. Okay. So my suggestion to you is build the system, master your system, and then you will automatically be able to take these decisions like buying, adding and selling. Okay. Superb. Thank you so much for asking that. Chandrabhan Haritwal is asking, are you doing webinars in Hindi? So we generally do it in English. From time to time, if there is any need and if there is a big demand, we can do it in Hindi also. I'm pretty much fluid in Hindi, but just that, a lot of things is easier to understand in English because of the nomenclature, and easier to speak also, because compounding, how will you tell in Hindi? It's very difficult. Yeah. So yeah, that is what we do. Thank you so much for asking that question. Superb. Okay. So I think we are good so far. And if you don't have any further question, I would thank all of you for being here till the end. I really appreciate your learning spirit. Thank you so much for joining. Please stay connected and let's learn more in other videos on this YouTube channel. Thank you so much for being here. And if you have yet not liked the video, just hit a thumbs up before you go. And let's meet in yet another powerful video in this channel. Thank you so much. Take care and Jai Hind. Bye-bye.